Feehley, the Executive Director for the Maryland Society of Accounting and Tax Professionals, and welcome to another edition of MSATP TV. Joining us today is Jim Arnie, who's going to give us the legislative wrap-up for this past legislative session. So, Jim, why don't you tell us a little bit about what's going on down in Annapolis?
It's empty.
It's empty. I bet it is.
The session has ended, obviously, and they're out of town, but it was a busy, somewhat busy session. But from my perspective, it seemed to be, not being down there, a very smooth session. And the reason I say that is there were 800 pre-filed bills before day one of the session. Never seen that many pre-filed bills. Perhaps that helped make things run a little smoother. I can't really say if that was the only reason or part of it. I think the other reason, or another reason, is this was the first session that Senator Ferguson, President of the Senate, was in charge, and without the late Mike Miller being present, I think that took some pressure off, perhaps. And it was the second full session that Speaker Jones was Speaker of the House. Last year was her first full session without Michael Bush, because he died, I think, the day before the previous session ended. So I think we're beginning to see probably some of their hands-on management and style and so forth. So I think the pre-filed bill, and I think the other thing was, as we know, we were not allowed into the buildings. No one was, except the legislature and the staff. So they didn't have to contend with people there, lobbyists, but bidding for their time. Yeah, I'm sure they receive phone calls and emails, but they've got a staff that can handle a majority of those. So I think that helped smooth things out this year, but still a busy year compared to subsequent years. This year, there were a total of 967 bills introduced in the Senate. And that's just kind of like what I call tax related bills, but does not include bond bills that get introduced and have to be heard. I kind of backed them out. And there was about 200 in each house of bond bills, but 967 Senate bills and 1,380 House bills were introduced this session. And that was a combined total of 2,347 bills. I was curious how that compared with previous years. So I went back and developed a spreadsheet, and it's less than the two preceding years, 2020 and 2019. The highest year of bills that's been introduced was actually 2018. And if you recall, that was an election year. So the session takes place in January through April. The election is in November. So I'm sure they're getting bills introduced and hopefully passed so they can tout their successes for the upcoming election. In 2018, there were 1,832 Senate bills, or excuse me, House bills, and 1,269 Senate bills for 3,100 bills. So you can see 2021, we had 2,300, that's 800 less.
Right.
Of the total bills, 174 were actually referred to the society for the volunteers to review and determine if any action should be taken, should monitor or whatever. Not a significant amount of compared to the total introduced, but 174 bills in total. And last year, I think that number was like 247. So it was concerned. I didn't see near as many tax-related bills this session. And of those 174 bills, personal income tax accounted for 64 of them. And that's always the big tax bracket of the bills. We get to review. And that usually ends up being about 33 to 34%. And then small businesses had 59. And that's kind of a catch-all because you can have things like whether it's dealing with the hourly wage law or leave and things like that that impacts small businesses, but it's not tax related. Those types of bills get put in small businesses. So what I like to do is just kind of touch base on the bills that passed, regardless of whether or not the society was tracking them, but will come into play either the next tax season or the subsequent tax season after that.
Okay.
We have House Bill 10 or Senate Bill 48, and that's the subtraction modification for living organ donors. I've covered this before in one of our sessions. It increased the subtraction amount from $7,500 to $10,000, and then added on some of the expenses that can be included in that subtraction modification would be unreimbursed child and elder care expenses and medication expenses attributable to the organ donation. Maybe they had to take medication before or after that. So that's the first one. We have the Tax Relief for Working Families Act. And this one is the interesting one, I think. That's House Bill 319 or Senate Bill 133. They haven't been signed yet or come into a law yet. But this authorizes local governments to set a local income tax on a bracket basis effective on or after January 1, 2022.
Okay.
And if they impose that, the minimum local rate must be at least 2.25%. That's the current local rate for Worcester County now. So I presume they took the lowest rate and held that there. But if they do it, if they change their rates, they have to do it on a bracket basis, much like the state does. They can follow the state's brackets or they can create their own. They can't create a tax bracket that is lower than the preceding tax bracket. So they can't cut a deal, so to speak, for higher income earners, so to speak.
Okay.
And they can consult with the controller in finding out the brackets and see which way they want to go. But it will take effect for taxable years beginning after December 31, 2021. So anybody that's going to do
So
that,
that'll be for next year's taxes.
yes.
Okay.
So they would have to, anybody that's doing that has to notify, and this is a standard law that's been in existence for ages, even when I was director, any local government that is going to change their local tax rate, they have to notify the controller by June 1st preceding the tax increase. So if it takes effect in 2020, no, it's going to be effective, yeah, for all tax years after December 31, 22. So we wouldn't see it on the tax return until 2023 when you're filing your 2022 tax return.
Okay.
The next one is, might sound a little annoying, but I don't think it will be. This is the Income Tax Internal Revenue Code Amendments decoupling. And an amendment of the Internal Revenue Code that affects the determination of federal adjusted gross income or federal taxable income does not affect the determination of Maryland taxable income for any taxable year that begins in the calendar year in which the amendment is enacted, that's under current law, or, and this is the new part, any taxable year that precedes the calendar year in which the amendment is enacted. And I guess the reason why this is was introduced and so forth is because the federal changes their laws on a calendar year basis, but the revenue comes in on a fiscal year basis. So they're trying to
Okay.
compensate for.
Okay.
So that's something that, I'm sure the controller's office will keep us apprised of. The next one is another subtraction modification, donations to diaper banks and other charitable entities, House Bill 711 or Senate Bill 622. The subtraction modification is equal to $1,000 of a donation made by an individual. And this can be done through church organizations and so forth that then provide those to shelters and so forth. If there is a business out there that does this, they must be registered with the Department of Labor as one of these charitable programs. And this bill will only be effective for tax years 2021 through 2023. And unless they come back and extend it, it will terminate on June 30th of 2021. The next one is a food donation pilot program extension, House Bill 752 or Senate Bill 539. All this does, there's already a food donation pilot program in existence, and this just extends it for 2 years through calendar year 2023. The next one for taxes, it was called the Whistleblower Reward Program and Statute of Limitations for Tax Collections. This is House Bill 804. And this provides for a whistleblower program to be where an individual that reports someone who's circumventing the tax laws, they can get a reward. I think the maximum is 30% of the tax interest and any penalties collected. They do have thresholds on it. I think the income threshold for, if I were to report an individual, I think the income must be at least $250,000 or more that person was earning. And for a business, the income must be $2 million or more. So it's not your nickel and dime, stuff. It's
Right.
worthwhile. And I think the other interesting part of this bill was the statute of limitations. It's now saying that it can be collected. It's extended from 7 years to 10 years. So
on a fraudulent return.
I'm sorry?
On a fraudulent return.
Yeah, I would think it would be a fraudulent return.
Okay.
That's a good question. I'll go back and check and send you an email to make sure they're just not extending the statute of
The
limitations.
statute of limitations. Right.
The next one is another subtraction modification. This one has been introduced in prior sessions, but not successful. This year it was. It's House Bill 1178, and it's a first-time home buyer savings account. And this allows a taxpayer account holder to designate an account with a financial institution as a first-time home buyer savings account. That would be the designated account. And the account holder is an individual who purchases a single-family home as a principal residence in Maryland and has not owned or purchased either individually or jointly a home in the state in the last 7 years. And 2, that establishes individually or jointly with another person who is also a first-time home buyer and files a joint tax return with the individual. And the eligible costs include the down payment and the closing costs and so forth. An individual can put into this designated account up to $5,000 a year and do that for 10 years to build up, say, for a down payment on a home. And they can only do it for that 10-year period for a total of $50,000. And then they have to make a purchase within 15 years. If they don't, then that money has to be reported on their tax return as ordinary income to
Okay.
pay it back. This next one I was somewhat unfamiliar with. It's called the credits for preceptors in areas with healthcare workforce shortages. That's House Bill 1252 and Senate Bill 102. And this is where doctors participate in physician and nurse practitioner training programs. It used to be they had to provide 160 hours, and apparently there's 3 sessions in one of these programs, and they had to donate 160 hours in each of 3 programs. And they reduced the 160 hours down to 100 hours. And it extends this program through June 30th of 2026. And the credit certificate will be in the amount of $1,000 for each student rotation of the minimum number of hours required. So in order to get 1,000, if they have 1 student in training and they do all 3 students, then they get $1,000. If there's 5 students in there, they would get certificates up to 5,000, and the maximum is 10,000. But when you look at them a physician spending 300 hours of their time for a $1,000 certificate credit, that's not a high rate of pay for a physician.
Right.
Senate Bill 218, that's the child tax credit and expansion of the earned income credit. We covered this on a previous session. This became law. It's chapter 40 without the governor's signature. And that's where individuals that don't have a social security number, but they have an I-10 in Maryland, they will be allowed to claim the earned income tax credit, whereas on the federal, they can't.
Right.
And then it's also that provision if they have a income of 6,000 or less, when they have a child under the age of 17 that has disabilities, then they can get that $500 special credit.
Even with an I-10.
Yes.
Okay.
The recovery for the economy, livelihoods, industries, or the relief as we know it. That was Senate Bill 496. That was one of our first Facebook Live sessions that we covered each of those. So I'm not going to belabor that one. Small businesses, labor and employment leave with pay, bereavement leave. This is House Bill 56 or Senate Bill 473. It expands Maryland's Flexible Leave Act by authorizing employees of employers with 15 or more employees to use earned paid leave for bereavement leave for the death of the employee's immediate family member. Whereas before that leave was only for sick leave.
Right. So it's leading more to the PTO issue of paid time off rather than separating out vacation and sick leave.
Yes.
Okay.
Employment discrimination, this was the title of the bill, employment discrimination time for filing complaints, House Bill 290 or Senate Bill 455. This increases the time for filing a complaint with the Maryland Commission on Civil Rights that alleges an unlawful employment practice other than harassment. And a complaint must be filed within 300 days after the date on which the alleged discriminatory act occurred. So I think it was 60 days before. I may be wrong on that, but it's a considerable difference in the amount of time one has. Corporations and associations filing fee study. I'm just putting this in there so practitioners will be aware of it, that it's requiring, and we'll see this as we go throughout these, some of these state agencies, legislature kind of took notice of their agency due to some of the problems that we heard so much about during this pandemic and unemployment and so forth. But this requires the State Department of Assessments and Taxation to study and make a recommendation to the General Assembly regarding certain filing fees and associated requirements of neighboring states that are equivalent or substantially similar to filing fees. So we'll have to see how that turns out, what the recommendations are, and then if any bills result from those recommendations, whether or not the fees get reduced, altered, increased, or what.
Right.
Similarly, corporations and association fees for processing articles of dissolution, certificates of cancellation, and other documents repeal. They have eliminated the filing fee for documents filed to dissolve, cancel, or terminate an entity.
That's probably a good thing because most companies don't file the paperwork just because they don't want to pay the fee and they just let it forfeit.
Exactly. So
And,
I guess this is just making it legal, so to speak.
Right.
The next one is State Department of Assessments and Taxation list of business entities not filing annual report, House Bill 839. All Maryland domestic and non-Maryland foreign legal entities are required to file an annual report every year by April 15th, and failure to file the required report results in the legal entity's charter being forfeited. But according to SSTAT, when a foreign legal entity fails to file the required annual report, their charter would be fortified the same year, which follows this existing statute. However, domestic legal entities were given a 1-year grace period to get their annual report filing current with the department. This policy, while beneficial to domestic legal entities, is not authorized by statute. So this bill will address that issue by now providing a 1-year grace period for domestic legal entities to get their act together and get the fortification straightened out.
Right.
Estates and trusts, Maryland Revised Uniform Anatomical Gift Act. This expands this scope of purposes for which anatomical gifts not made to a specific person or for a specific person can be used to include research and education. So I'm not a lawyer, obviously, and I'm sure the attorneys that handle estates and trusts will make note of this, and that was House Bill 301 or Senate Bill 265. Estates and trusts, guardian of property of minor or disabled person. This is House Bill 1000. It prohibits a guardian of the property of a minor or disabled person who's not a family member of the minor or disabled person from distributing or dispersing property without court authorization or confirmation if the distribution or disbursement would financially benefit the guardian, except as specified reasonable compensation and reimbursement for expenses, or a family member of the guardian. So it's just trying to keep the guardian's hands out of the cookie jar, so to speak.
Right.
Estates and trusts. Say again?
I said that that's a good thing.
Absolutely. Estates and trusts, wills, custodianship. This House Bill 1266 alters provisions governing the custodianship and deposit of wills by establishing duties and requirements applicable to a custodian of a will and allowing a person having custody of a will other than the testator to deposit the will for safekeeping with a register of wills and authorizing an attorney to dispose of a will in a specified manner under certain conditions. So again, that's just, I think, tightening the reins and so forth, and making sure it's done in a compliant manner.
Mhm.
Sales and use tax. This is called Sales and Use Tax Vendor Collection Credit Job Training, House Bill 337 or Senate Bill 257. This authorizes a qualified job training organization to claim a sales tax vendor collection credit in an amount equal to 100% of the gross amount of the sales and use taxes that are collected by the vendor. The total amount of credits that a vendor may claim may not exceed $100,000. So that's a big chunk of change. So you could do it, say, for 4 years if it's 25,000 each year, but the maximum
Right.
allowable would be $100,000. Next one is sales and use tax, peer-to-peer car sharing. This extends the sales and use tax rate for peer-to-peer car sharing to continue at 8% beyond fiscal year 2021. However, beginning in fiscal 2022, the sales and use tax rate will become 11.5% if the vehicle is a passenger car, multi-purpose vehicle, or a motorcycle that's part of a fleet of vehicles that includes more than 10 vehicles owned by the same person. Car-to-car sharing, it's kind of like Uber and
Right.
Lyft and all of
Lyft.
those. And the last group, I kind of categorize them as regulatory, and I don't mean they're regulating the industry and so forth. It's more of some of the state agencies or whatever, like we covered, I mentioned earlier, perhaps I should have put that one in there, but the study with assessments and taxation. The first one is on unemployment insurance, study on system reforms. This one has already become law under the Constitution. The governor didn't sign it, but it was presented to him while the session was still in session. So if he doesn't sign it or veto it, in 6 days, it automatically becomes law. And it's now law. It requires the Maryland Department of Labor, in consultation with the Legislative Services, BLS, to study and make recommendations regarding reforms to the unemployment insurance system in the state. And as you remember, I commented earlier, the horror story that we saw about people trying to get unemployment and so forth.
Right.
In conducting the study and making recommendations, MDL must report monthly to the Department of Legislative Services and the Joint Committee on Unemployment Insurance Oversight on the status of the study, consult with the U.S. Department of Labor and UI agencies and other stakeholders, and examine and consider any report or recommendation made by the National Academy of Social Insurance Unemployment Insurance Task Force. By July 1, MDL must submit an interim report, and by December 1, submit their final report. So the General Assembly was all over those
Department of Labor.
problems and issues. Second one is on unemployment insurance employer contributions. This enhances existing requirements for employer payment plans when Table F is applicable for purposes of determining state unemployment insurance taxes. Basically, what this is saying is they have to come up with and offer additional ways, such as a payment plan, to these businesses that extend, right now it's through August, and they want them to go beyond the month of August and so forth. So that's what this bill is covering and requiring them to do that. And this bill, okay, Maryland Tax Credit Evaluation Act alterations. This is House Bill 1086. This is requiring a unit of state government that administers a tax credit authorized after July 1, 2021 to report to the Senate Budget and Taxation Committee and House Ways and Means on measures that unit has taken to implement the credit and renaming the Credit Evaluation Act to the Tax Expenditure Evaluation Act. So apparently some state agencies weren't getting the word out and so forth. So now it's a law that anybody that administers one of those must. Unemployment insurance, Maryland Department of Labor, accountability and oversight. Again, somewhat similar. What this bill requires is once per week, MDL must post on its website a weekly report that includes the number of open claims for unemployment that haven't been resolved, claims pending adjudication, claims for which the first payment has not been made within 21 days after the week ending date of the first compensable week in the benefit year, and 4, claims closed, and 5, claims resolved by adjudication, and 6, claims for which the claimant encountered technological problems with the online portal. So you can see they're really coming down on unemployment.
Yes, they are.
And the next one is unemployment weekly benefit amount income disregard. This increases from 50 to 200 the wages that are disregarded for purposes of determining an unemployment insurance claimant's weekly benefit amounts. And this bill will terminate automatically with the expiration of the state of emergency declared by the governor. So whenever he declares state of emergency is over, then this provision will no longer be effective. State Board of Public Accountancy, if you recall, they had one in. It was under the education requirements with obsolete references. That bill passed, was signed by the governor as Chapter 99, and that just removed obsolete language and replaced it with the correct language. It was using some old state associations that the college had to be a member of, and those names have changed over the years, and that was just updating them with the correct names of those associations. I thought this one was interesting. Corporations and associations, trade name certificates dash requirements. This has become law. Senate Bill 181 was signed by the governor as Chapter 106. Requires businesses engaged in any mercantile, trading, or manufacturing business to disclose the identification number assigned by the State Department of Assessments and Taxation for the associated business on a specified certificate that is filed with the department. Requires that a legal business entity be registered with the department before the filer can register a trade name. The trade name must be associated. The trade name must be associated with a registered entity. However, this requirement is not included in the corporations and associations article. The department does not require that non-legal entities, sole proprietorships, and general partnerships be registered before the filer can register a trade name. And I'm including the reason for this because I thought it was interesting. As a result of the COVID-19 pandemic, the department reports that Maryland financial institutions were not processing the PPP loan applications unless the entity could provide a certificate of good standing. Many filers had to contact SSTAT to bring the entity out of forfeited status and back into good standing, because in prior years, these filers only registered a trade name and did not actually register the business itself. These filers erroneously believed the entity was properly registered with the department. And then when PPP loans come along, that's when kind of like all hell broke loose, I guess. So I thought that was interesting, and I'm happy to see that they've taken action to correct it. And hopefully we don't have to go through this anymore or again. And the last one is Department of Assessments and Taxation identification number for business task force. This is requiring assessments and taxation to convene a task force to study and make recommendations on the adoption of a unique Maryland identification number for each business registered and licensed in the state and to be used by specified state agencies. And if you go into the bill, it lists some various state agencies that they're looking at to see if they would be able to use that unique number. And SDAT must report to the Governor General Assembly by December 31 or December 1st, 2021. And the findings on their findings and recommendations of the task force, including any proposed legislation. And I thought this one was interesting also because years ago in the Comptroller's office, we developed a unique number for businesses that were registered. And that was supposed to be used by all state agencies statewide. And apparently that didn't work out as well as they were hoping, and et cetera, because not all businesses that have to register with the state may not have to register with the Comptroller's office, perhaps.
Right.
So those are the bills that's going to be on my final report that passed, and some have become law already, and the others, I'm assuming, I don't see anything on there that the Comptroller may veto, but we'll wait and see.
Okay. Well, thank you very much, Jim, for this update. It certainly keeps us up to date and gives us a lot of things to think about as we move forward. I agree with you that they're certainly coming down on Department of Labor, but it also sounds like they're trying to come down on SDAT a little bit too, on this unique numbering system, because it's just too many ID numbers related to each business. So that would be a good thing. So I appreciate the time that you spend.
Not a problem.
Thank you very much. Yep.
Thank you.
Next week, we'll be having Ellen Silverstein there talking to us about the convention that'll be coming up in June 1st, 2nd, 3rd, and 4th. So we'll be looking forward to hearing from Ellen next week. So thank you all very much for joining us today, and we'll see you later. Have a good day.
See ya.